So your business has some empty space, right? And you're thinking, hey, let's rent it out, make a little extra cash. Smart move. But have you stopped to think about the GST side of things? We're going to dive right into that because believe me, the rules can get a little tricky.
Yeah, this is a super common scenario, and honestly, it's one that can easily catch you off guard. You're thinking about that nice rental income, but the tax folks, they're all about that GST compliance. So that brings up the big question. Who's on the hook to pay the tax? Is it you or is it your tenant? And look, this is not just about, ticking a box on a form. If you get this wrong, you could be looking at some serious tax headaches, disputes, interest charges, even penalties. Spending a few minutes to really get these rules down now could literally save you a ton of time and money down the road.
Okay, so who pays the tax? To figure that out, we've got to break down the two main rules that are really the foundation for all of this GST on rent stuff.
All right, you've got two main players here. First up is what's called the forward charge, or FCM. Think of this as the normal way things work. You, as the landlord, collect the GST from your tenant, and then you pay it to the government. Simple enough. But then there's the reverse charge, or RCM. This is where things get interesting, because the responsibility completely flips. Your tenant pays the GST directly to the government. Knowing which of these two applies, that is absolutely key.
Let's start with residential property. So what happens when your company rents out, say, a staff apartment or a house for someone to actually live in?
Okay, there are basically two ways this can go. Path number one, your tenant is registered for GST. In that case, the rent is taxable, but here's the twist. The tenant is the one who pays the GST, using that reverse charge we just talked about. Now, path number two, your tenant is not registered for GST. Well, then the whole thing is exempt. That's right, no GST for anyone. Easy.
So the big takeaway here, when you're renting a residential place for someone to live in, it all comes down to one thing, your tenant's GST registration status. That one little detail decides everything.
But what happens if the use of that property changes? I mean, what if that residential house is now being used as, say, an office or some other kind of commercial space?
Right. The second that residential property gets used for a commercial purpose, the game completely changes. Bam! It's now a taxable service, and you, the landlord, are back in the driver's seat. You have to collect and pay the GST using that standard forward charge mechanism. No ifs, ands, or buts about it.
All right, now let's switch gears and talk about commercial property. We're talking about your classic office space, a warehouse, or storefront.
And you know what? This is where things get way simpler. When you're renting out a commercial property, all those other details, like whether the tenant is registered for GST or what they're even using the space for, they just don't matter.
For commercial rentals, there's really only one rule you need to remember. You are always responsible. You charge the GST, you collect it, and you pay it to the government under the forward charge mechanism. Every single time.
Okay, so we've got the rules down, but how do you actually prove you're doing everything right? Well, it all comes down to having the right paper trail. You've got to issue the correct documents. You've basically got two main documents to choose from. First, there's the bill of supply. You'll use this one for any GST exempt services, which makes sense, right? No tax is being charged. Then, you've got the tax invoice. This is your go-to for all taxable services. It's the official document you need to charge GST. So let's just break it down into a simple three-step process. Step 1. Figure out if the service is taxable or exempt using all the rules we just went over. Step 2. Issue the right document, either that tax invoice or the bill of supply. And finally, Step 3. Report the whole transaction in your GSTR1 and GSTR3B filings. You follow those 3 steps, and you're golden.
Whew, we've covered a lot of ground, haven't we? So, to make it super easy, here's a little cheat sheet that pulls everything together for pretty much any rental situation you'll run into.
Let's just do a quick run-through. See those top 2 rows? That's for residential property being used as a residence. It's all about the tenant's GST status. Simple. Now, if that same residential property is used for commercial purposes, it's always taxable and you, the landlord, pay. And what about any commercial property? Even simpler. Always taxable and you pay. Seriously, this table is your best friend. And there you have it. That's your quick and simple guide to handling GST on rental property. It's just a perfect example of how a seemingly straightforward business move can have some pretty complex tax rules hiding underneath. It really makes you wonder, doesn't it? What other hidden tax rules might be lurking in other parts of your business?